Good afternoon, everyone. Really lovely to welcome you all to our first session in Degrowth Week. My name is Michelle Maloney, and over the coming week, you will meet all of our lovely organisers. Really want to say a big hello to Donnie Field and Anissa Rogers and Sarah Bashforth. Those three lovelies and myself have been putting together our program this week, and we're so excited at all the different speakers who'll be joining us. I'll do a few housekeeping comments in a moment, and then we'll hand over to the lovely Donnie. But first I'll share screen, and if the technological gods are shining on us today, all will go well. So, as I said, welcome to Degrowth Week. This week we have 10 different webinars with multiple discussions about what degrowth is, why it's important, and the kinds of people and organisations around Australia and around our planet who are doing good deeds. I'll share in a moment the rough program for the week and point you to the Humanities booking page. If for whatever reason you haven't signed up and you've gotten a link somewhere else, you'll be able to read the full program on the Humanities page. First, I'd like to acknowledge country, and it's become a really nice Zoom tradition for people to pop into the chat whose country you're on. So do please feel free to do that if you wish. I'd like to acknowledge that I live, work and play on the unceded lands of the Gubbi Gubbi and Jinnaburra traditional custodians. Here in the New Economy Network Australia and all of our sister organisations, we like to acknowledge that we're on Aboriginal land. Land was never ceded, there was no treaty. The entire continent has been governed since time immemorial by many hundreds of different Aboriginal nations. And today we're very honoured to work in close partnership with many Indigenous friends and always acknowledge that it always was and always will be Aboriginal land. We'd like to acknowledge the elders of the past and present and the emerging leaders who continue their custodial responsibilities of looking after country and looking after each other. The work of decolonising our hearts and minds is very important to us in NENA, and for us that means really challenging the way we think about the governance of this place and challenging the way we think about so many aspects of the modern nation state. And some of that's really relevant to degrowth, which we'll be exploring a whole lot more over the coming week. So firstly, what is degrowth and why is it important? And we're going to share the same slide every day so that people who are joining us each session can reflect on what they think degrowth is and why they're interested in it. I won't read all of this slide, but really degrowth refers to both a set of theories and also a very powerful growing social and economic movement. It's all about critiquing the idea of endless economic growth, but it's also about focusing on a very deliberate way of shrinking wealthy economies in a way that moves past the growth of GDP, scales down the destructive and unnecessary forms of production to reduce energy and material use, but at the same time increase and focus on economic activity that secures human needs within the boundaries of bioregional and planetary ecological well-being. It's a very purposeful strategy. And really, why is it important? For those of us who are concerned about the current state of the planet, both in its terms of ecological health, climate change, biodiversity loss, but also social justice and injustice, focusing on the over-extraction by industrialised nations, particularly colonial powers that continue to colonise and take land and materials from others. By focusing on these issues, we can address a lot of the problems that we're very concerned about today. I'm not going to read through this, but I did want to share with you, and I'll pop it in the chat again, that this is our awesome program for the week. Today's session, Donnie Maclurcan, who has so kindly joined us from the Postgrowth Institute, will be having a conversation about what a degrowth and post-growth future might look like. You can see all the other sessions there. Whichever ones you can join, and hopefully many or all, we do really extend a warm invitation to everyone to join us finally on Friday, when we're going to just have an open discussion about where to from here, looking at degrowth both from the point of view of the DNA network and the NENA network. And who are they, you might ask? Let me tell you, and then we'll finally hand over to Donnie. Again, I won't read the whole slide, but the Degrowth Network Australia, which Anissa Rogers and Donnie Fields are part of, is a place for people who want to or who are already acting, organising and campaigning for a degrowth world. They connect online and where possible together. and they have open dynamic gatherings. And it's Anissa and Tonier who've been so critical in making this week happen. So please do get in touch with them. And what's lovely about the way we all play and work together is that the New Economy Network Australia, I'm one of the co-founders and one of the volunteers who keep it going. NENA is all about bringing individuals and organisations together to really talk about, discuss, pull apart and put back together Australia's economic system, both in our understandings and in practical ways, particularly with a focus on decolonising and localisation. We host hubs. We've got a very, what we'd call a distributed governance mode. We have lots of different hubs looking at different issues, doing their own thing, and then bringing their knowledge and ideas into this wider network. So it's a really exciting place to be part of, sort of at the crossroads of some pretty amazing people. And now, that's it from me. Oh my gosh, I actually kept our fabulous introduction within time. I'm so proud. So now I'm going to stop sharing and introduce Donnie Maclurcan from the Postgrowth Institute. I first met Donnie in person many moons ago. I think it was at our 2011 Environmental Law or the Australian Earth Laws Alliance conference. And watching the Postgrowth Institute grow since that time and spread its awesomeness and its ideas and sharings around the world has been really exciting. So Donnie, hand over to you. Donnie's going to give a talk for as long as he wishes, probably 20 or 30 minutes, and then we'll open up for Q&A. If you do have any questions as we go along, please write them in the chat and I will share them with Donnie. So remember, this is not a true webinar format. The place to put your questions is in the chat. So thank you very much. Over to you, Donnie.
Thanks, Michelle. I have a feeling that just about everyone on this call already knows what we need to do about the predicament that we're in. That your bodies actually have the fundamental answers when it comes to what it is that we're being called into in these moments of crises, of polycrises. And I'd like to explore that by doing an experiment with you all. To do that experiment, you'll need a piece of paper and a pen. So I'm just going to give everyone a moment to locate paper and pen. If you don't have access to those, you can do this with your finger in the air or on a tablet or something. But ideally, it's done with a paper and a pen. So we'll just take 20 seconds of silence there for people to go and assemble some paper and pen. All right, and we're going to start by drawing a line vertically down the center of your page. A vertical line down the center of your page. And then in the top right, I'd like you to write the word future. And in the top left, write the word present. So the top right is the word future, the top left is the word present, with a vertical line down your page. All right, we're going to start on the right-hand side. I want you to imagine a future that is working for everyone and everything, human and non-human species, an economy that's working for everyone and everything. Just imagine it for a moment. And when you've connected with some kind of imagination around that, drop down into your body and feel it. How does it feel in that economy that's working for everyone and everything? Just feel that for a moment. How does it feel in that economy that's working for everyone and everything? And when you've connected with a feeling, draw a symbol or a shape without lifting your pen that represents how it feels in that economy. Or a symbol or a shape without lifting your pen that represents how it feels in that economy. Symbol or a shape that represents how it feels in that economy without lifting your pen. Okay, we're going to move now to the left-hand side. How does the present economy feel? And when you've connected with that feeling, again, draw a symbol or a shape without lifting your pen that represents how the present economy feels. A symbol or a shape without lifting your pen that represents how the present economy feels. Okay, I've been doing this experiment for about 10 years now, probably with close to 10,000 people from around the world. I'm guessing from more than 100 countries across just about every demographic you can imagine. I've done this with a lot of Fortune 500 executives. I've done this with people living on the streets. I've done this with free market capitalists, anarchists, people across the gender spectrum, with all sorts of backgrounds. It doesn't matter who I do this with or where I do this in the world. People consistently draw one of 4 symbols or shapes for the present and one of 4 symbols or shapes for the future. So I'm going to show you what those are, and then we'll just have a chance for people to share in the chat what they drew a little bit in just a moment. So let me just pull up here we go. You should be able to see my screen there. And what people consistently draw for the future is a circle, an infinity or panarchy symbol, a spiral, or a heart. If you drew one of those or a close variation or a combination of those, just put a Y in the chat. We'll just see how many of our 82 people. Let's see if we get some letters in the chat there so you can see. Quite a lot of people. We don't have the ability to do hands up, but you can see lots of people putting a Y in the chat there. All right, and now for the future, here's what people consistently draw. Sorry, for the present, people consistently draw a jagged line, a triangle, a downward arrow, or a mess of lines. So before I ask you to share that, let me just make a line break here in the chat. So if you drew one of those, the 5th option is, yeah, sometimes people draw a rectangle, a box. So again, if you drew one of those, just put a Y in the chat. And so we can see a lot of people, again, drawing similar or close variations. And so if we were to reflect for a moment on this and just take a moment to have a look at what you drew and then what people consistently draw across those 2 things, again, irrespective of where they are. Just take a moment in silence to reflect. What here you notice about the differences, both in what you might have drawn and what you're seeing here is the consistent differences across all sorts of cultural difference. Just take a moment to reflect before I share a few observations. Now, when we have time to do this in an extended form, people will often share things along the lines of the aspect of here being circular and closed, this one feeling abrasive. They'll often go into the sensation that they experience or associate with what they draw. And all of that makes a lot of sense to me and fits within the general narrative that I'm going to explore today. But probably the primary takeaway that surprises me is that here we have all non-linear shapes. And here we have those with linearity. And if you look at what you drew, I'm guessing that may generally show up as a phenomenon, the difference between non-linear and linear. In other words, we all know in our bodies across all forms of difference, again, whether we are committed to a uber capitalist system or we're passionate about an alternative, there is a consistency of understanding that comes from our embodied sense of what is needed, that the future has to be based on non-linear principles and that the present has a linearity to it. And that's pretty wise because that's how nature works. All living systems thrive on non-linear circulation. If you think about the way that we have carbon, nitrogen in our ecosystem or blood, oxygen in our bodies. We thrive and our systems thrive when those things are circulating. But living systems stagnate and ultimately die when we have accumulation, ongoing accumulation, which is a linear function. So that's how natural systems, living systems operate. And if we're to look at our economy, just like healthy natural systems, economies that work would be based on, or are based on, because there are examples of them around the world, they're based on circulation, not accumulation. Circulation of what, though? Well, in the way that our institute looks at things, where we contrast a post-growth vision with our growth-dependent reality, there are three layers that we seek to unpack here. The first layer of circulation, and this is where most of the post-growth, degrowth, or even sustainability initiatives around the world emphasize, which is about the circulation of resources. You'll hear a lot of people talk about the emphasis in exploring alternative economics within ecological limits. There'll be an emphasis on production and consumption, because ultimately it's the aggregate overconsumption with an emphasis on the wealthiest and an emphasis on global wealthiest in the global north, where we have this accumulation of resources and a throughput of resources where things get wasted very quickly that have a whole lot of effects on our environment. This, for us, though, is the outer ring, this circulation of resources. Yes, we do need to see, rather than the typical take, waste, make and waste cycles, we do need to see a greater circulation of resources, a slowing down of the speed with which resources go from extraction through to full waste. But this is the area that is the most peripheral out of these three that we'll explore here. It's more of a byproduct, a downstream, so to speak, outcome of these two other pieces that I want to suggest are more central. But we do know that presently we're at less than 10% of a circular economy globally, in the sense that less than 10% of things actually recirculate in our system. More than 90% is just going straight through into waste streams. And of course, that does cause so many of the problems that we have in terms of planetary boundaries being crossed in terms of those thresholds. But more fundamental than the circulation of resources is the circulation of power. The reason that we have the accumulation of resources, both with the wealthiest and in terms of the way that wastes accumulate in our system, is because a small number of individuals and corporations have so much power to drive the narratives around what progress is, so-called progress, what the purpose of the market economy is, or even just dictating the way the market operates and the way that government is so often captured in the capitalist market narratives. That comes in large part due to that concentration of power, the accumulation of power that's part of this dominator culture, power over phenomenon. But even more central than the circulation of power is something that doesn't get a lot of conversation in what we're going to explore today, and that's the circulation of money. In our capitalist economy, in our linear economy, we actually have an emphasis, and we're going to explore this in just a moment, on the circulation of, on the concentration of money, the accumulation of capital. And the absence of that circulation is actually what holds back the circulation of power and therein the circulation of resources. And I noticed that we had someone, I think it's Kelly, on our call today, who's calling in from the coastal Salish lands in the Pacific Northwest, in the BC area. And what's interesting about the coastal Salish communities, amongst other Indigenous communities, is that the way that they operate and continue to operate their economies operates in a way that is fundamentally built on circulation in these three aspects. So I said before that there are examples of economies that operate just like natural systems, and it's no surprise that they are often found in indigenous cultures that have survived genocide and other oppressive factors. And the way that the coastal Salish lands communities operate is that they use a deep principle of potlatch, which is a Native American term for gifting. And so what will happen is that when the wealthiest or when there is a significant amount of accumulation of money or its equivalents in a culture, that individual or individuals will put on a feast and share their wealth with the rest of the community until they are at a level of wealth that is back down. Often in cases, they become the poorest in terms of the giving away of gifts through that process. And in doing so, they gain respect. In lots of indigenous cultures, you see this throughout the Polynesian islands, for example, as well. This emphasis on those who give the most, those who circulate most money and power actually gain the most esteem. Now, that's a hard concept for most people in a white supremacy-oriented form of capitalism, where the notion of power over and the notion of accumulating money sits so fundamentally under the so-called logic of the system. But it isn't the only way. In capitalism, though, the standard for-profit model, to unpack this a little more, always sees money accumulate. And I want to explain how that happens, because it's a piece that gets missed often, especially with people who are focused on environmental justice and sustainability. There's not a lot of emphasis on this monetary accumulation. Even in the space of social justice, we see an emphasis usually on wealth inequality. But I want to suggest today that it's the monetary accumulation that actually underpins our growth economy. And here's how it accumulates. You have this process of siphoning that would be familiar to many people on this call, where certain individuals in what I would call the elite economy as compared to the real economy being where most of the labor exists, most of the work gets done. This money accumulates in the elite economy largely from gains on investment, some wages, and some subsidies that flow towards the owners of land and businesses. And this siphoning is always greater than the funnel. Now, the funnel is things that in Australia we would be very familiar with in terms of a progressive taxation system. So we have not only wages that are paid to individuals who are in the formal market economy, but we have taxation that ensures aspects of welfare, subsidies, scholarships, donations, insurance, all of these different ways that money that has been taken out of circulation can be circulated back in after the fact, after profits of businesses or rents on land. But the reality is that the funnel is always weaker than the siphon in a capitalist system. Why? Because if the amount of money that, let's say I owned 100%, I owned a business that was on the Australian Stock Exchange. I just happened to have 100% of the shares as an individual. If the profits, if it was a dividend paying stock, if the profits that I gained, let's say I had a $100 million profit in one annual year, if the amount that I then paid, I've already paid my wages because it's profit, so it's after the fact. If the amount of taxes that I have to pay and the amount of philanthropy that I give was equal to that $100 million, then it wouldn't be capitalism. There wouldn't be any incentive for me to invest in a business, start up a business, these sorts of things. Why? Because in capitalism, the fundamental driver is private accumulation. It's return on investment. It's profit maximization. And so our system has this baked in process in which money accumulates in the banks, the actual bank accounts of private individuals and companies, faster than it actually circulates. That's what actually underpins capital accumulation, and that's makes sense in a capitalist system. Now, the reason this is really problematic is because of something that requires a little too much explanation for the time we have here. We can pick it up in the Q&A if it's helpful. But whenever you have monetary accumulation, not wealth accumulation, but monetary accumulation in a system, you have to have debt accumulating elsewhere. And that's just to give sort of the headline, that's because the way that new money is created in our system is that it's loaned into existence. You have to have an equivalent debt whenever new money is created by banks. And so what this means is that you end up with money siphoning into the elite economy, but the equivalent debt plus extra, because you have interest on loans, and you also have ways that debt can be created without new money being created. And I'm going a little technical there, but if you think about if you were to purchase a government bond, a treasury, for example, you are going to use existing money that you have to purchase something, and now the government has a new debt. So what happens is we have a ratio of around 2.5 times the amount of debt as we see money in the global money supply and debt stocks. And the problem here is that the people and the companies and the governments that hold most of the debt that has to match up with the money that's being accumulated are those who are struggling the most, right? The majority of the world is actually struggling with the burden of debt that cannot be in aggregate reduced. Why? Because there's not the money circulating in order to pay down a debt, right? You have to have money in order to cancel a debt. If I have a mortgage on a home or a car loan or a business loan, and I want to pay off that debt, I need money in order to extinguish that debt. But if the money's accumulating, then I can't access that. And so what happens in this economy is that those who are in debt, the poorest households, businesses, and governments, in order to just continue in this economy, there's only one thing that they can do other than declaring bankruptcy. They can only take on more debt. And that actually is what underpins inequality. To go a little technical here, what you see when you have debt over in the space where the majority of the labor is, and accumulation of money over in the elite economy, you see asset inflation across different forms of asset classes and downward pressure on wages. That's why around the world, in so many places, and including in Australia, it's so difficult for people to afford to live, because it continues to get out of reach to, for example, purchase a home or just about do anything to survive, because the increasing amount of debt burden. It's why you have the most incredibly bizarre at first glance scenario in Australia. I remember reading last year that this was about 2 weeks apart. There were two different headlines. The first headline was that Australians had just become, on a net wealth per capita level, the wealthiest in the world. They just passed the Swiss. And at the same, so here's this headline where if you're reading that, you're saying, wow, we're really incredibly well off. And that was largely due to huge amounts of inflation in the housing markets. And so net property values were raised. And then at the same time, just 2 weeks later, there's an article saying that Australians have the highest levels of household debt in the world. These two things have relationship. So if anyone on this call has been in that circumstance or is in that circumstance of going, gosh, I live in a lucky country, or I'm privileged, or I'm in a circumstance where I feel really privileged, and at the same time you're feeling huge stress associated with just surviving, this shows you why that exists. It's because these things are in relationship, and in a capitalist system, in any form of capitalism, you're going to have increasing debt load that can only be shunted around between governments, households, and businesses. And so this drives global inequality. Of course, there's aspects of racist, colonial, neo-colonial actions that compound the who suffers most under this system. But it's actually this that drives the growth of dependency, largely because of that accumulation of power that enables the narrative of ongoing capitalism and consumption to be driven in a way that benefits the elite economy, right? That continues to see the extraction of money largely through this lens of what's the point of business? Well, in a capitalist system, it's to accumulate more money. Once you've accumulated more money, what do you do with that money? You're going to store more of it away in your bank account as you get wealthier, and then you're going to invest more in order to make more money. So it's a self-perpetuating system that has a growth built into it. So what's a post-growth alternative? Well, this is where I encounter a situation in 2009 in Queensland. I'm at a community development conference, and the keynote speaker, Colin Saltmere, says these 5 words that changed my life. I've got a picture here. There's Colin. He's up on stage and he's talking about this engineering company, Mayuma, civil and construction engineering, based out of Camberwell from memory. And they have about 50 employees at the time, $12 million turnover. And then he says the 5 words that changed my life. We are not for profit. Now, I had never before conceived of an engineering company being not for profit. So I went up to Colin afterwards and I said, "Mate, what's the deal?" Like, he didn't talk much about that throughout the speech. He didn't emphasize that. I said, "What's the deal?" He said, "Well, us Aboriginal mob weren't interested in getting rich out of setting something up. We were interested in the purpose, which was to train a lot of young engineers and surveyors and the like, and to offer that service. And so I think he said we pooled some money together, we loaned it in as the startup capital, and we set up under a not-for-profit structure, because the notion to do any different is just an anathema to me as an Indigenous man." And I said, that makes sense. I then started to look around and realized that I had been working for not-for-profit businesses all of my life. The Fred Hollows Foundation, which you might see largely as a charity, but what they've set up in Eritrea and Nepal with their lens factories that manufacture intraocular lens that then significantly offsets the costs of surgeries in those countries. Lifeline, where I was working as a telephone counselor that had its furniture stores. St Vincent de Paul, where I was working with its homelessness support services, that's got its op shops. I mean, there were examples everywhere, not just around me, but ones that I had been involved in, of forms of business that were using enterprise and profit in service of purpose, that were circulating their profit. And then I started to realize that it wasn't just smaller companies or ones that I had encountered in my own life, but that it went all the way through to some very massive businesses. So here is an example. This is Bangladesh's biggest lifestyle brand. The people that contribute to this number over 65,000 artisans throughout Bangladesh. The name of this is Arong, and it's a business run by the world's biggest non-government organization. All of the profits from these stores circulate back into the real economy. Why? Because there's no private individual owner of this business. There's no shareholders of this business, right? You walk in here, you buy something. If there's a profit margin on that at the end of the day, it goes back into a larger not-for-profit entity. And that entity is BRAC. Let's have a look at BRAC just briefly, because when you see these numbers, you might be surprised. So BRAC, as a not-for-profit, has 126 million beneficiaries, employs over 100,000, mostly women. When I last checked a few months ago, it had around US $1.2 billion of income, making a healthy profit. And if you just reflect for a moment, and let's just see in the chat, what percentage of BRAC's income do you imagine comes from philanthropy, right? One of the world's, if not the world's biggest NGO. How much of the world's biggest, in other languages, charity, because it's how often we perceive these things, one of the world's biggest NGOs, how much of its $1.2 billion of income comes from philanthropy? Just put a number in the chat as a percentage there. Let's have a look at some of those numbers. Some people are saying 20% there. What else? Some people, so I might have preempted this in a way that people are expecting it's zero. The reality is it's still supported by philanthropic contributions, but the number is only 14%. Only 14% of the world's biggest NGO's income comes from philanthropy. That is a story that is not told. It's just, I've not encountered that story being told, and I suspect for you it's the same thing. Most people think of NGOs, they think of charities, they think of philanthropic dependency. And the reality is, if you look at the work of Lester Salomon and his team at Johns Hopkins University, is that the story from Afghanistan to the Philippines to the US is quite different. These days, non-profit organizations are actually largely, on the whole, not dependent on philanthropy, but they actually generate their own revenue through the sale of goods and services. And this changes a lot of things. 20% of global GDP, in fact, when my work with Jennifer Hinton, when we looked at this on sort of the global scale and we get to publish this research, we discovered, though, that almost 20% of global GDP is from businesses without private individual owners that circulate their profits. So I'm going to give you examples of the 4 different areas where this happens that points to the possibility for a post-capitalist, post-growth market economy that doesn't have that accumulation of money that drives the accumulation of power and the over-accumulation and over-consumption of resources. I'm going to give you some examples, both of global, and because we've got a lot of Australian residents in the audience, I'm going to also give you an Australian example of each. The first is the field of industrial foundations, where a foundation owns a business. And you might have seen one of the popular examples recently of Patagonia, where the owner gifted over the full financial rights, the full financial equity of the company in the billions of dollars over into a foundation. So there's no longer individual ownership of Patagonia. Other examples include IKEA, Bosch, Carl Zeiss. But in Australia, the Guardian newspaper, for example, is a profitable business that does not have private individual owners. It's a foundation-owned business. The second category that contributes to this 20% number that we mentioned there are consumer cooperatives, where you have members that in some cases will be called owners, but that's a nominal sense. And an example of this is pretty much all of the credit unions around the world, not for profit. They are consumer cooperatives. Likewise, there's a bank in Australia. There's a number of these, in fact, but Beyond Bank, that many of you may know, is a consumer cooperative. There's no private individual owners of that bank. There's no one, if that bank is profitable, what happens with the profits is they go back into the services to reduce the costs on loans, for example, or increase the interest that your deposits might have, because it's a member serving institution without private individual equity. You have state-owned enterprises like the profitable Indian Railways, 100% state-owned, or in New South Wales and Australia, Sydney Water, for example. Another example of something where there's no private individual ownership. And lastly, you have, as I mentioned before with BRAC, examples of businesses that are non-profit organizations that have business models underneath them. So Hostelling International, very, very large. I think they've had over 1 billion hours of people, 1 billion stays over the years, and not for profit, 100%. In Australia, An example of this is Homeground Real Estate out of Melbourne, a real estate company that is not for profit. And so what do they do with their profits? They put it back in, they circulate it and provide accessible and affordable housing for people in need. So this leads us to this alternative that Michelle invited me to share a little on, and I'm going to conclude here in just a moment, and we'll have a chance to unpack things in the Q&A if helpful. What we found when Jennifer Hinton and I modeled this, when we actually went through and said, okay, if you had a market economy where the primary model of business was not for profit, right? So if you imagined the things around you, if you're in a room right now and you looked around you and you thought, okay, so that TV would be have been built by a not-for-profit, and the carpet, or if you're outdoors, that chair that's there, etc. Or if I went down the street and I looked at, I was in a business district, that all of those businesses would be without private individual owners, but could still operate like businesses, given we've just seen a whole swathe of examples of businesses that can operate that way, right? So it's still a market economy. What happened when we looked at that, when we modeled that, was unbelievable. It surpassed even what I could have imagined was possible. Pretty much all of the things that were problematic in capitalism. So I'm thinking here of things like compound interest, advertising, corporate personal good, even things like money and debt, obviously accumulation of those things. All of these pieces, what happened when you actually have businesses being driven by purpose and using profit in service of purpose, is that they flipped. They flipped. They became actually positive feedback loops, which gets me to the point that, yes, for our economy to operate within biophysical limits, it has to be fundamentally different. But fundamentally different in terms of its operating framework, and then the outcomes as it pertains to the amount of things that are being extracted and sent to waste, and all of the externalities, so-called externalities that get created, all of the challenges that we're facing with how our capitalist system just spews more and more and more. But there's also this interesting thing where a lot of people then will propose a kind of scenario. I mean, I was reading recently someone's proposal that got a lot of interest around, like, what does a post-growth future look like? And everything that I read there seemed very authoritarian to me. Regulations of this, caps on this, rationing of this, etc. And having spent the previous decade before moving to Argentina in the US, I can tell you, proposals like that are a non-starter. You'd have riots within a second, the second that you threaten the primacy of the market, with an emphasis on government regulation. And so while I'm not denying the importance of regulation, and for those of you who are working in the policy spaces, the importance of ensuring that we both protect and try to move things forward in ways that allow us to have a thriving economy within ecological limits, I'm suggesting that there's perhaps a more interesting, nuanced way that doesn't get as much emphasis, which is to look at areas of the economy where the circulation of money is inherent, just as in communities and in the informal economy. That's at the heart of how the care economy operates, for example, is on this circulation of resources. And that if we put our attention in those spaces more, if we actually steer our money, our investments, our labor, our activism, our insights into this difference between a for-profit and a not-for-profit economy, that it can be interesting in picking up what is already a trend that we're noticing, is that these forms of businesses, these ones here, are increasingly out-competing the for-profit equivalents. And that for us is really interesting, because this post-growth vision, this notion of degrowing in the aggregate towards some kind of post-growth future, for us, the missing piece has been, well, what's the system look like? It can't be capitalist. But then when you mention that to a lot of people, the alternative that comes to mind usually is some form of state socialism, communism, etc. And that's obviously been shown to be problematic, largely, again, because of the concentration of power. that happens, and sometimes the concentration of money under a certain guise. And so if we'd actually imagine a future where we're living, thriving within ecological limits, it's hard for me to think of, as much as we need to decommodify the economy and see the rise of the informal economy and the valuing of the informal economy and the care economy, etc., and a demarketized, decommoditized market economy. I still don't imagine that we're going to have a future, if there's a sustainable future at all, that doesn't have a market economy at its heart. And in that sense, this is where this vision for a post-capitalist market economy with very practical application. You can go move your money to a not-for-profit bank right now. You can go look at where you're purchasing from and find those 20% of global GDP creating businesses and say, okay, I'm going to actually move and I can influence others in that space. That's a powerful thing. Alongside all of the emotional, psychological, and other aspects around this notion of an economy that we have at the moment, where we feel never enough, where we're told we're not enough, where there's not enough for everyone, etc. These notions that go so deep, penetrate so deep into our psyche, versus the abundance that exists in the informal economy, in our caring economy, and in these forms of business. Not all perfect, of course, because they operate in a for-profit capitalist economy, but in their heart, draw on this natural wisdom that most of you drew on in the beginning when you drew those notions of the circular, those notions of things needing to have a returning back in rather than a linear growth path. And so that's where I'll end today, to share with you this notion that we had the answers. You drew on them at the beginning. You know that we need to move from the jagged line to the circle. And if we're actually to apply that, not just in a policy approach where we say we need to put limits on consumption, or of course, we need to look at all of those aspects. But if we actually look at what's fundamentally accumulating in our economic system, what's fundamentally problematic, we discover it's that accumulation of money, and therein the accumulation of power. And that in addressing those pieces, in looking at those fundamental bits, which is a little outside of the typical post-growth, degrowth narrative, which comes from that more sustainability, environmental aspect of ecological limits and the work of the Limits to Growth authors and people like E.F. Schumacher, these important pieces. But when we look at the heart, we discover a really critical piece, because it gives us agency, the ability to actually contribute to systems change through our individual actions. Not this notion of individual change, change your light bulb and it takes the emphasis off systemic problems. I'm not saying that at all. I'm saying you can actually contribute to systems change through the individual actions you take to seek to create a more circular economy with respect to money, and then power through things like the work of sociocracy and other areas like that. So excited to explore this and unpack some things with you now in the Q&A. Back to you, Michelle.
Thank you so much, Donnie. That was wonderful. And as someone else has said, very encouraging, because so much of the solutions we think are out of our grasp because we have to make so much change within governments. But we might come back to those policy issues, because there's a couple of interesting questions and scenarios we might discuss just to outlay how that all works together. But what I might do first is I've been collecting questions and comments, well, mostly questions just because of time. And Donnie, if you want to read any of the comments, there are other ones there. So Marita has just noted, and sort of a question, not-for-profits still grow exponentially. For example, and she's put Genu, and I'm sorry, I'm not sure what that is, puts profits into real estate, then charges rent to people with disabilities. That's not so ideal. I wonder, Donnie, if you can talk about, if a not-for-profit is operating as a not-for-profit, where it puts its profits, though, if it puts it back into another space that creates harm, then obviously that's not ideal. Did you just want to speak to that issue a bit? There were a couple of other questions linked to that as well.
Yeah, thank you so much. I love that question. Thank you for asking that. The first thing to say is, again, not all not-for-profits around the world are duly ethical, fantastic, etc. They're still problematic. And so when we're talking about the shift to, for example, a post-capitalist, post-growth, not-for-profit system, we're talking about something that's necessary but not sufficient. And the question that I often pose when people sort of raise examples of a problematic not-for-profit, I mean, you take another example in the US, you have exorbitant wages for certain not-for-profit health insurance companies, executives. The question that I raise, which I think is an important piece before we actually look at the ethics of what's going on within that not-for-profit, is what would be happening if that disability, well, it sounded like it was a home provider. I'm not sure if it was focused on disability or if that was just describing people with disability having that experience of being price gouged or priced out. But if it was owned by a for-profit company versus a not-for-profit, the data shows that two things would happen. On average, the prices would be higher, right? The affordability would be more problematic. And secondly, and this is what we miss often, is that then would mean that the profits in a for-profit company would be getting extracted out to whoever owns that business. And they don't come back into the economy. Like very, very small, about 7% of that money typically gets reinvested. It usually gets reinvested to make more money to extract. So what happens with that company, and I don't know, I think it's Genu, I don't know that example. If they are purchasing more land, I would ask them, I'd say, tell me, what do you have a look at the financial reports to see like what happens. But in reality, in my experience, under those kind of circumstances, they will usually be purchasing more land. So they'll often have a long-term strategy that says, okay, we're offering a fee for service initiative here because we want to run it as a business. We don't want to be dependent on government. Why? Or philanthropy. Why? Because as we know in Australia very well, when a government changes political parties, very quickly, funding can just be gone overnight. And so a lot of these organizations are often running businesses that might be charging difficult rents in terms of the market, because the market across Australia is difficult. Maybe it's market rates, maybe it's below, maybe it's slightly above, I don't know. But if you look at the mission, they may be having a long-term strategy to be ensuring housing affordability. I'm not sure in the case of this company. And that sometimes takes an approach that might be hard to see from the outset as equitable. And maybe it isn't. Maybe it's run by people who've got some problematic things. But what I will say here is that under law, no one individual is with the profits. I'm not talking about the wages that might be at that company, but no one is profiting individually from that not-for-profit land or rental company that was mentioned in the question. I can assure you of that.
Thank you, Donnie. And I'm just collating a couple more related comments. So Lena has actually commented there, so should we be calling it surplus instead of profit? And Roberto has said, so it's not so much about not making a profit, but how we use the profit. So using the profit to reinvest in the purpose. Did you just want to comment on that?
Yeah, I love those explorations. The one reason that I love the term not-for-profit and why I encourage us all to keep using it and say, like, take it back as and talk about not-for-profit business. And I'm that's different to traditional nonprofits, right? The philanthropic dependent nonprofits that less than 50% of their income comes from business activities. I'm not talking about those when your traditional charities. The reason I love that language is no matter where you are in the world, no matter what legal jurisdictions or systems you're in, what we found, and this builds on the work of the team at Johns Hopkins University, is that there's almost a universal agreement across jurisdictions around the difference between not-for-profit and for-profit. And it comes down to these aspects of private individual equity ownership. So you can go to Bahrain, or you can go to Fiji, or you can be in Australia, and you'll have these kinds of shared understandings that there's a line where something goes from not-for-profit over into for-profit. And the fact that there's that universality actually gives us the ability to look at global phenomenon and say, all right, so if the for-profit economy with private individual ownership is what underpins capitalist accumulation, and we're saying that's problematic, then we have to, by default, talk about a market economy that isn't for-profit, right? It doesn't matter how many different paths we might explore towards the kind of economy I'm alluding to. the fundamental piece is you have to have an economy where the money circulates inherently, and the only structures under which that occurs are not-for-profit. You don't have for-profit forms, no matter how benevolent they are, whether they're B Corps, whether they're led by really great capitalist leaders who are really interested in community and involved in their kids' sausage sizzle on the on the weekend. It doesn't matter. The reality is that if they're for-profit businesses, someone's going to be accumulating money, and that's going to underpin so much of the inequity that drives the overconsumption, particularly by the wealthiest in our world.
Thanks, Donnie. Some great questions coming in. Tony, our fellow organizer for Degrowth Week, has a really good one. So the profits go back to the people who create the goods. But what happens to the goods themselves once they're used, broken, need mending? Or is this something not accounted for yet? I know this is possibly outside the scope, but if you're taking a systemic overarching approach, then perhaps it should be. Any thoughts?
Great question as well. If you were to look around you at which businesses are actually leading when it comes to reuse, questions of the commons, questions of real circular economy, not just like efficiency gains in the production cycle in order to be able to then sell a bunch more shit. What I see is that it's the not-for-profit forms of business. I'm even thinking of when I was back in Sydney. I don't know if it still exists, the Bower, right, a recycle centre in Sydney. From memory, and I'd be surprised if this isn't the case, it's not-for-profit, right? It's so often these not-for-profit, and when I say not-for-profit here, I'm really wanting to emphasize it, purpose-driven, like actually purpose-driven, not a company that says we're purpose-driven, but in reality is also governed by needing to make money for shareholders, but a company that the first thing they do is that they're driven by purpose. Those businesses around the world, from what I can see, like the leaders in that space are the ones that aren't constrained by the profit-maximizing behavior. So that question before about like not-for-profits growing and scaling, yes, but when a not-for-profit grows and scales, it does so in order to fulfill its purpose, right? It says we think that there's a reason for the scaling here. It's not scaling in order to make more money for private individual equity holders. They're scaling because they're like, okay, we see there's a need here and we look to scale it further. And there's sort of an example I want to share here that might be very counterintuitive. And this is far from a perfect company in the world. And you might be like shocked to hear someone from a post-growth institute mentioning IKEA, right? Because IKEA certainly is part of, drives a lot of consumption activities. But there's an interesting thing with IKEA. They're a not-for-profit, they're foundation-owned. Ingvar Kamprad, he handed over the ownership in part to avoid a hostile takeover. So it's like, I'm imagining people here hearing like IKEA, how the heck could IKEA be linked with a post-growth narrative? Hear me out here. Because IKEA is not for profit, I sat down with the heads of sustainability IKEA, and they didn't know who I was. I was at a conference, there was 4 of them. And I said, could I ask you a question without telling you who I am? And they said, okay. I said, you've all worked at for-profit companies before IKEA. And they said, yep. I said, what's the difference now that you work at a not-for-profit and you're sustainability executives? What's the difference in terms of like sustainability? And they all said, almost unanimously, it is so different. We get to go into IKEA and have conversation about sustainability where the starting point is anything's possible. In our for-profit companies that we were part of before, the first thing we get asked is, what's the bottom line? That difference, the constraints on business, and again, I'm not saying that IKEA is anywhere near the world's most ethical company, but the fact that they don't have the shareholder pressure means that they do things very differently. And in many cases, I would say, have a goal to produce things that last. They don't focus on the built-in obsolescence, actually. And that was an important part of Ingvar Kamprad wanting to keep his company in a certain way. Now, there's ethical violations in Eastern Europe around timber and all sorts of questions we can ask there. But again, remembering businesses operate in a for-profit system. So you can imagine what happens as more businesses, if we take out this private individual ownership aspect that is so fundamentally problematic, it causes so much dissonance. Think about the amount of people you know who work in the formal market economy who really say they care about sustainability and then have to show up at a job where they just don't get to actually do anything about it. That is primarily because they're working in a company where there is often a fiduciary responsibility by the board directors to drive the company in terms of making the greatest profit. So this is just to highlight, like, there are, trying to come back to that question about the sort of the sustainability at the local scale, these sorts of things, and the use and the amount of production and consumption, etc. If we go to this ethic of enough, which really sits underneath a truly circular business model. I've seen businesses that have, I was just talking to a business a few days ago, a not-for-profit business that after 10 years has just wound itself down, right? It said, this was our objective, we fulfilled it, and so we wound down. That's unthought of in the for-profit sphere, right? Like, unless you go out of business. But to the actual notion of fulfilling a need and then stepping away, and I'm not saying, again, that all not-for-profit businesses do this. It's a whole non-profit industrial complex out there, especially in the aid and development field. But when it comes to the business, rather than the traditional charities, there's different ethics that come through often that connect with what you all drew, or most of you drew at the beginning there, about what's it going to take to get to a system that actually works.
That's actually interesting, Donnie. I've looked a lot at the history of corporations, and we talk about it in the new economy course that we run. And in the early days of colonial expansionism, corporations were largely developed by charter and shut down when they were no longer needed. It was predominantly through the development of railways and other things that they decided to use the model from the Dutch East India Company to go, the British East India Company, perpetual life. This is a brilliant idea, let's live forever. But the idea of shutting down after you've achieved something is, it's apparently one of the early ideas. There's a number of good questions coming in, and what I'd like to do is loop a few of them together with the permission of our lovely audience, so that we can talk a little bit about the elephant in the room, which is the role of government. So, Donnie, I'm going to pose a few questions that bring some of the comments and questions together, if that's okay. So, firstly, Anissa, for example, is saying, I feel that many parts of the economy are only viable because they use a for-profit economy of scale way, which ignores the environmental and social consequences. Some of that can be in costing, but as a lot of not-for-profits avoid the damaging effects of production, there's a lot of different ways to look at production and consumption. And my big question, Donnie, is what do we do about, for example, really dangerous things that you might have a not-for-profit to set up to dig for coal and continue doing fossil fuel extractivism, but the money is used for the ongoing purpose of digging up coal. So how does a society choose what it should and shouldn't do? And what's the role for collective action there?
Another great question. And I'm seeing someone ask here about private land ownership, and so maybe we can touch on that a little bit here, which I would say is absolutely a key part of this. So there's an example, and it's going to present as not a great example because in the end the company wound down, but I believe it was more because of aspects of leadership rather than the viability. And I'm going to forget the name. It was something like the Virginian Conservation Foundation in Richmond, Virginia, that was a conservation entity. They were doing remediation of mining lands, and they bought, I think it was 8 coal mines that were operational. And they did it in order to actually provide a just transition for the workers, offsetting the coal production, the environmental costs, offsetting, so to speak, with remediation projects that they were already involved in. So they didn't say, let's shut down the coal overnight. They were using that as a profitable business to actually fund the model. And now you might say, that feels problematic for me. And I would go back to, and I'm not saying these things aren't problematic or like raise sort of questions that are important, but I would say, if we go back to the equivalent, right? If a coal mine is not going to be shut down, period, like if it's profitable in some kind of way, which means that if it's profitable, then it's not going to be shut down, is the historical evidence, then wouldn't we rather it be owned by a not-for-profit than a for-profit? And to your question, Michelle, what happens there is that when you have a not-for-profit, so if you're saying the not-for-profit exists in order to continue mining, I've not seen a not-for-profit fit under any legal structure worldwide that can have that as their purpose. There's certainly industry advocacy groups, lobby groups, etc., right? But usually you have to have some kind of environmental or social purpose that extends beyond lobbying to fit under a certain kind of model that allows the business ownership as a subsidiary or the like. And so my point is here, you had an environmental group, a conservation-oriented group, and they copped a lot of flack, right? Because a lot of people, especially hardcore leftists, are going to say that's really, really problematic, etc. And maybe there are problems there that are worth looking at. But again, I just come back to this thing of like, there's a real politic here. And this is what I think gets missed in a lot of these spaces. Let's even take the divestment movement, right? A huge movement. When I was living in the US, huge emphasis on divestment from fossil fuels, especially in the universities, and having huge announcements when the university had moved its portfolio out of investment in fossil fuels. And I get it, right? Like it makes sense that if you're a younger person, let's say studying, and you want to advocate for something, and you feel like you don't have much of a say in things, when you get to a university that's got a $1 billion plus endowment that's largely in fossil fuels, it makes sense to say let's shift it out of it. But what was the reality of what that then led to in terms of just mathematically, financially? Well, those shares didn't disappear. They sold those shares, right? Getting out means you sell your shares. You don't just say, I'm going to rip up the shares. Who do they sell them to? People who then benefited with the massive boom that we saw in mining, oil, etc., fossil fuels, in terms of the profits over the last 10, 15 years. And so the reality was that divestment may end up leading to greater monetary accumulation, which drives global inequality, which drives overconsumption, et cetera, et cetera. So from a systems perspective, right, there's these questions that often to me keep coming back to: who holds the power? Who's accumulating the money? And as we look to ways that are innovative approaches to actually intervene in the market, to actually say, what can we do? There's no level of government regulation or notions of industry with voluntary shifts or altruistic, business leaders that's going to get us there in a capitalist system. There's none. We're kidding ourselves. So we have to then sort of say, right, what would it mean to actually be part of driving the push for a post-capitalist market system? And that's where some creative avenues, including not-for-profits owning some of the challenging resources, may be part of the mix in a transition phase.
Thanks, Donnie. And perhaps as someone who in a former life, for whatever sins I had, was a lawyer and still understand the regulatory structure, what's interesting in all of that discussion is, while you're saying government can't regulate to stop corporations from doing certain things, but if we shift them to not-for-profit, we can change the emphasis of what people do. However, it is in fact government regulations that create the parameters of what is defined as a not-for-profit. So all the policy boffins listening, the role for government in this scenario, and I'm just recapping, Donnie, is we as collective human beings who in some situations have a capacity to vote for or influence the creation of laws in our society, our laws can play a part in creating the framework for shifting a lot of the emphasis of for-profit to not-for-profit or to surplus. And it's those legal structures of organizational entities that is an incredibly important place to make some serious shifts. So there's always going to be a role for collective responsibility for how we shape our actions in society, but it might not be government banging corporations over the head saying, stop doing that. And it might be government saying, you can actually only operate as a business if you do it these ways. And I think that's a really important thing to make quite explicit.
A brief follow-up on that, Michelle, because it's a great point. Recently in the UK, there's been laws that have continued to expand the ways that cooperatives, for example, and mutual organizations can raise money. And one of the great examples from the UK about how government and government regulation can affect what we're discussing here today is the right to refusal. So when, for example, a business shuts down, so if all of you imagine your local communities and a for-profit business, for example, shutting down, imagine, as happens in the UK, where the community gets 6 months to actually work out if it can collect enough financing to take that company to continue it as a community-owned business. Right? That kind of legislation is so critical to give the right to first refusal, rather than having what typically happens in Australia, which is a massive conglomerate, often international, swoops in, picks up the business, even if they don't care about that, largely because of the land value appreciation that sits underneath it, and then screws communities over. Likewise, the business councils on cooperative and mutuals had an incredible success a few years back. They realized that if you went to business.gov.au, the only type of business that was talked about was for-profit businesses. They lobbied and got government to add in cooperatives, right? Which make up an incredible percentage of the Australian economy. And so even these things, some of you might work in universities or in higher education in a broader sense, and thinking about influencing people to ensure that students, whether they're in high school, primary school, or in tertiary education, are actually exposed to the range of business models that exist. It's a story that doesn't get told, right? You do a master's in business administration. What's that all about? It's about how to run a for-profit business. So there's just wonderful things that can be done. And yes, the government has a crucial role, but the problem of government right now, fundamentally around the world, and especially in Western democracies, is political capture by for-profit businesses.
Absolutely. And that's great because it segues to a set of questions that folks have asked. Terry, Antonia, and a couple other folks. I'll just try to paraphrase, guys and girls. I'm trying to get everyone's ideas and interests covered. So Terry said, wondering about how you might move to this system. When you talk about this, you're addressing the environmental middle class, us, but 1% of the global population own most of the means of production now, not the middle class. And Tonya has asked a very linked question. Given that all the power today is still in the hands of a small group of financially wealthy, won't they just hold on to their power more tightly? And then there's further questions about how do we shift to these kinds of structures, given that the very elite wealthy will not be super interested in that.
Yeah, great questions. I'm going to go to the heart of what I would recommend, which is to focus on where your money is in a banking system. Even if you don't have, let's say you've got $5 in the bank or you're in debt. In both of those scenarios, I would still recommend doing what I'm describing. And here's the reason why this is such a powerful lever. If I move $5 from one bank to another bank, from a for-profit bank to a not-for-profit bank, and I mean, this is interesting. My mum gave me permission to say this. My mum knows what I'm on about. She's been following what I've been doing for the last 20 years. She knows that I've encouraged her to shift her banking over from St. George over to a not-for-profit bank. We're talking about it yesterday and she said, oh my God, darling, I just haven't done it. I realize it'd only take 5 minutes, but I just never did it. That probably is one of the most powerful things my mum could have done, because when you move money, you don't just move $5 over here and then it goes over here as $5. Because of the way that capital reserve ratios work and banks can lend out more than what they hold in reserve, the result is that you then are actually shifting a huge amount more. So if I take $5 out of this bank and I move it over to this bank, it might be the equivalent of moving $70, right? 5 times 7 and then 5 times 7 over here, huge. Take then what happened when Christensen in the US, back about, 15 years ago, got tired of banking with Wells Fargo because of the gouging that was happening with the fees, moved a small amount of money that she had over to a credit union, put a post up on Facebook, and saw, gosh, I think it was $150 billion moved over the next year or two as a result of the Move Your Money campaign she inspired. So I'm going to ask like a real hard question to everyone here. Have you thought about where your money is? Not just in terms of like, what's the most environmental bank, etc., but in terms of, are you banking with a not-for-profit bank? Are you aware of whether it's a not-for-profit? Have you sort of done the research to discover, are there private individual shareholders of the business? And then if you've got a loan, I'm great to see some people are saying yes. If there's a If you've got a loan, same thing, shifting that loan over if you can. Sometimes we're stuck into really disastrous kind of arrangements with for-profit banks, but if you can, shifting your loans over, right? That's such a crucial piece. And you might say, yes, but the 1% holds so much of the assets. Yes, but interestingly, take in the US, for example, here's a stat that might blow your mind. There's about 250 million people in the US who have access to the financial system through banking, right? 250 million financially active individuals in terms of being banked. 144 million of those, so way more than 50%, bank with a credit union. Hold on a second, what? Yes, the majority of people in the US, the belly of the beast, have an account with a not-for-profit bank. They have no idea it's not-for-profit, most of them. It's about 11% of overall equity. So it's not it's still far from the majority of US money is with credit union systems, but the credit union membership is growing faster than the rate of population growth. They are outcompeting the for-profit banks. And this is to speak to this point of like, God, where's the hope? Where's the hope when you've got so much concentration in the wealthiest? You're right, they're not going to let go. Two things. One, they have no idea about this not-for-profit banking thing, not-for-profit market economy. For them, it's just business, government, and society, right? So they're not even watching out for the increasing threat of a not-for-profit form of business. And then what happens is, if you line up two businesses, let's say, I'll take a crude example. If you had Coca-Cola, for-profit, and Coca-Cola are not-for-profit, and you'd hope over time that Coca-Cola not-for-profit would change what it does, right? But if you had those two businesses side by side, the not-for-profit, if it ran in this very moment exactly the same way, same balance sheet, etc., then the reality is that the not-for-profit bank would the not-for-profit Coca-Cola would outcompete the for-profit Coca-Cola. Why? Because the not-for-profit Coca-Cola doesn't have to pay dividends, let alone tax advantages that it might have, let alone what happens with a workforce when you have it driven by purpose and the way that innovation
hopefully
is
not, let alone the millions or billions they pay to their CEOs as well.
Exactly, right? You're absolutely right, Michelle. The salary differentials within not-for-profits are much, much tighter. So you've got all these competitive advantages. So if you're sitting here listening to this going, yeah, look, I don't know. I mean, I'm following some of it, but this all sounds like a bit of a pipe dream. I mean, God, isn't this meant to be more about like environmental and what we're doing for the environment? Hold on a second. I get that. That makes sense. And there's something happening here that's freaking amazing. And I'm not trying to be like Marx and talking about, communism being sort of the natural outcome and then forgetting that the bourgeoisie are going to get hooked on their own growth. I'm saying that there's a market trend that happens that we can see if we look closely at everything, where competitiveness shifts. It's happened all throughout the history of modern market economies. Certain business models get more competitive than others. And I think you'll find that if you look at these forms of business where money circulates, they are becoming increasingly competitive and outcompeting the for-profit equivalents. And what's really important is that when you look at not-for-profit forms of business around the world, they're most often tethered to the local. And we know that under systems of resource constraints, especially with peak oil and these sorts of pieces, that we're going to see challenges with long supply chains. I mean, I wouldn't be surprised if we were having a conversation with Jeff Bezos and he's already said that Amazon, he doesn't think it's going to exist in the future. I would say probably the primary reason he would agree is because of the supply chain challenge. The business is not built on a hyper-localized production consumption. It doesn't have like maker spaces at the heart of it or cosmo-localization at the heart of it. Instead, it's a global supply chain business that thrives on stuff being shipped through exploitative ways halfway around the world. That kind of business is going to hit limits, and local forms of not-for-profit equivalent may well have advantages that compete with economies of scale. So that's just a plug for the relocalization movement, for the buy local, which has often got an intersection with what I've been describing today as well.
Yeah, and can I give a plug for the New Economy Network Australia, NENA, hosted a localization week only a few weeks back. It might be a month ago. And if you look on our website, you'll see the recordings from all of those activities. And I think we should always be thinking about the localization movement in terms of what we saw happen with COVID. It feels like a long time ago now, but when the lockdown happened, localization of food showed that here in Australia, there was a massive uptake of community gardens, but we also didn't run out of food because we have local food production. The localization of our economies is certainly part of this. There's a lot of comments and questions coming in. Two things I just wanted to come back to. Number one, with your talking about not-for-profit banks, Donnie, a number of folks are saying, what are they in Australia? I believe Bank Australia, that's who our organisations bank with, Bendigo Bank, and credit unions and mutual, credit unions and mutuals, most of them are not for profit, but it's worth checking them out. Bank Australia has worked very, very hard to be a not-for-profit that's trying to do good deeds. And our organisation certainly chose to bank with them for that reason. And other folks are saying, oh, there's so many other things we have to do. We don't have the time, of course. But unfortunately, modern industrialised societies are deep, huge and complex. And we all need to be working on those things that we can. I always say to folks, it's what we can do right here, right now, on our own and with others. That's about all a human being can try for. And I think what Donnie's talking about is a massive systems shift that's already happening, that's showing how bits of it can work. It isn't the panacea for all things. There is no one silver bullet in the complex mess that my people, the Eurocentric non-Indigenous of Europe, have created. So there's a lot of good things to be thinking about, ladies and gentlefolk. There's a really nice question, actually. We've only got about 5 minutes and we'll start to wrap up. There's a nice question about UBI. What's your perspective on universal basic income and supporting human beings I love UBIs and things like that because it enables humans to pursue their life's purpose and hopefully do good deeds or become an artist or sleep all day. That's fine. What do you think, Donnie?
Love that question too. From the outset, I'd say that personally, big fan of universal basic services. When it comes to UBI, I would put it through the lens of what we've been discussing today, which ultimately leads me to the conclusion that a UBI is fantastic in a not-for-profit post-capitalist system and deeply problematic in a for-profit capitalist system. And here's why. If you think about a UBI, right, and there's been lots of experiments that have been done in isolation from macro economy effects, and so that's a key piece here. So whether it's the studies in Finland or in Kenya or in parts of the US, etc., the thing that often gets missed when we talk about the global economy is the aggregate data. So I'm just going to go sideways here for a little bit. You might have heard people talk about certain countries being capitalism pulling certain whole nations out of poverty, middle class getting created in China, etc. And what never gets talked about is the debt, right? The other side of the equation, right? So it's important, I think, to look at these things both in aggregate and from sort of different angles here. The thing with the UBI, and again, I'm going to go sideways to get to my final point on this, is in a capitalist system where we see through sort of a neoliberal push over the last 50 years, most governments in democracies around the world moving to the right economically, where leftist leftist governments end up sliding into essentially working within largely capitalist narratives with a sort of social flavor, a social bent flavor. The reality of that system then is what happens is that free marketeers see remember the siphon we talked about before? Free marketeers, right-wing economic ideology actually sees the acceleration of that extraction, of that accumulation, of the siphoning of money. But the leftist approach in a capitalistic framework just hides it better. And so this is why you don't have an answer from most of the major political parties in countries around the world that are still capitalist in their orientation, because the right-wing approach accelerates the extraction and the left-wing approach just hides it better. Remember, the siphon is always stronger than the funnel in a capitalist system. So what happens then in a UBI, right? Let's say everyone in Australia was offered a UBI. It was graded by it was income dependent or asset, fixed, related to your asset positions, etc. Let's say it was like the fairest UBI you can imagine. Who's going to fund it? Let's take the typical approach, which is that government's going to put up front the fund for that, and they're probably going to either, let's say that they're going to put a big wealth tax on things in order to make that happen. All right, just imagining that's the case. Well, what are you going to be? Let's say I'm a beneficiary of that UBI. What am I going to be spending my UBI on? Well, maybe I'm going to pay rent on a property because I don't own a property. I'm going to buy goods, food, etc. I'm going to buy some electronics, maybe. Whatever I do, participate in some services. The reality is that the money that I'm getting from the UBI is going to get sucked out very, very quickly because it's still capitalism, right? So the point here is that until you change the system and move to a post-capitalist market economy, a UBI actually hides the extraction better. You'd say, oh, we've all got a UBI now. No, you know what's going to happen? In the aggregate, you're still getting capital accumulation because it's capitalism. So now what's happening with the debt? Where's the debt going? Okay, now the government's holding all this debt because it's funding a UBI. Mathematically, there is no way around the dilemmas I'm describing, right? It's fungible. You're just moving debt from different places to different places. And we know that has macro and microeconomic effects on the way that the economy works and on how trust works in market mechanisms. So UBI is great in theory, and in practice in small places, it may have effect that, the data may show, look at what it does. And we're all, yes, I imagine all of us are wanting less work, less stress, not having to keep friggin' pushing, seeing more family members in multi-family member families having to go into the labor force, et cetera, et cetera, et cetera. More time for caregiving, more time for rest. All of these things are crucial. But a UBI, just like a carbon tax, is the kind of thing that often sort of looks good and then can actually distract us from systems change, which is what's fundamentally needed.
That's excellent. We'll have to get you back in some big debates about UBI,
modern monetary theory, perhaps.
UBS and MT and all these other acronyms. Hey, ladies and gentlefolk, we're just about out of time. Before I thank Donnie, don't go anywhere. Let me give a plug for the rest of this week. So the rest of Degrowth Week, we've got a session tonight with Anitra Nelson and Sabrina Chikori. And then throughout the week, we have sessions on Tuesday, Wednesday, Thursday, and a final roundtable discussion that you're all invited to on Friday. And tomorrow I will give a special plug for the lunchtime session where Indigenous Elder Mary Graham and myself will be in a discussion about the relationist ethos and how Indigenous and First Nations perspectives can in fact give some pretty awesome guidance to what a different system can look like. I also want to give a plug to, and I never point in the right direction. Oh, there we go. Oh, Life After Capitalism. It's NENA's conference, 17th to the 19th of November. There'll be lots of really important discussions. Donnie has agreed to come back and tell more about how banks, not-for-profits, profits, and all those things can work and be changed. But I really invite you all to visit the New Economy website to see more info about the work that we're doing, not to be idealistic in terms of being impractical, but to be practical idealists about what's possible. Because yes, the planet's in trouble, absolutely, and there's a deep, deep urgency. However, we still have to continue exploring and discussing and sharing ideas so that we can keep moving forward. So that's my little advertisement. But on that note, to be an excellent host, it's now 1:30 AEST, and I'm going to say a huge thank you, Donnie. Thank you so much for sharing your thoughts and time and expertise. And I know you're also in the middle of Chris Reedy's conference. What's it called, Donnie? Give it a quick plug.
Transformations. Yeah.
Transformations in Sydney. All right. So I'll leave the final word to you, Donnie, but thank you everyone for being part of these discussions. The recordings for all of Degrowth Week will be on the NENA website, probably by the end of the week. Oh, and if you want to become a member, we are a volunteer-led, not-for-profit cooperative who banks with Bank Australia and doing all the good things. So please think about joining NENA and DNA. Over to you, Donnie, for the final word.
Thank you, Michelle. Thank you, everyone, for spending your 90 minutes here with us today amidst your no doubt busy lives. I really appreciate you being here with us on the journey. I'm looking forward to reading the chat afterwards and catching up with some of the insights that you shared there. I just want to say, your gut knows. right? You know in your body has so much to tell you about this. Essentially, what that experiment shows at the beginning is that everyone is just walking around with different levels of cognitive dissonance. So whether it's the executive CEO that you're familiar with, who runs a big problematic corporation, or someone that you're encountering later today who's not in the formal market economy, everyone's walking around with that understanding that we need that systems change to the non-linear, the circular. So in other words, you don't actually have to convince them on some level, but I would encourage you to encourage them, to invite them, to explore spaces where you can bring them into more of that conversation by ways of opening up the possibilities, by exploring what their wisdom has to share in the space. To me, that's a crucial part here. And I think if we do more of that, if we focus on what's already working in the system, what already people know, and meet people from that space, we open up possibilities that we might not have ever imagined to really advance towards that more beautiful world that our hearts know is both possible and realistic, as Charles Eisenstein so beautifully says. Thank you, everyone. Take good care and have a wonderful rest of your week.